Hey guys, it's Dan here. In this week's video we will talk about the topic: can big tech companies such as Amazon, Alibaba, Apple, Facebook, can they disrupt, can they eliminate banks? So for that we will talk about the current situation, where are we on this topic right now, what's the plan from the big tech companies for the upcoming years, and what are my final thoughts on this topic. So let's get started guys and dive into the topic. Let me clarify something before we start. Actually, there are two big categories of banks. There are central banks and there are commercial banks. When we're talking about the disruption of banks, it's not gonna be central banks, and I'm gonna explain you why right now. The central bank, each country or each region like Europe has a central bank, and this for a very good reason, because the central bank is kind of the boss of all the other banks. So what does a central bank do? Well, it's in charge of carrying out the monetary policy of a country or a region. It controls the money supply, so it's going to be the virtual electronic money, for example, on your bank account, but also real banknotes for sure. It's going to fix the interest rates going up when the economy is good, usually going down when you are in a big crisis like 2020 with the corona, for example. Central banks are also the lender of the last resort. For example, in 2008, when the financial Titanic hit the iceberg, well, all the central banks had to step in to guarantee the stability of the financial markets and of all the banks. Actually, they are the banks who save the banks. And well, of course, the primary goal of the central banks is financial stability. So the idea after 2008 was that this maybe could be disrupted, but this failed miserably actually. The idea was, and this is how Bitcoin was created, the idea was that central banks were no longer needed, and that we needed kind of a digital currency that would not be issued by the central bank. This concept, I know right now Bitcoin is at an all-time high, but not for that reason, because that concept of trying to replace the central banks failed miserably, and for a good reason. So when we're talking about disrupting the banks, and especially disrupting by tech companies, we will talk about commercial banks here. So let's dive into the commercial banks and see what they do and how they can be disrupted. To understand commercial banks, actually it's pretty simple, because we all know the big names of commercial banks. Every bank you know is basically a commercial bank. What is very important to understand is that to become a bank, you have to get a bank license from the central bank. For example, in the US, each bank has received a bank license from the Federal Reserve. That's very important, especially in the disruption process. So what do commercial banks do? Well, actually they serve individuals and businesses in different segments. First of all, of course, there are bank accounts, investment accounts, lending and payment processing. So let me walk you through quickly and see how this has been disrupted so far, because it's not what it looks like actually. You will understand what I'm talking about. So when we talk about bank accounts, for example, it's gonna be the classic checking and savings, debit card, credit cards, and these kind of things. So when you look at this category, bank accounts, you see actually it has been disrupted. You have Amazon Pay, Alipay, Samsung Pay, so on, so on. So this looks to be very disruptive. And basically, when you probably all heard of the Apple credit card. I don't know if it's only available in the US or everywhere, but actually it looks like it has been disrupted, but actually it's not the case, because when you look exactly at the Apple credit card, it's not a credit card from Apple, it's a credit card made by Apple, but in relationship with Goldman Sachs, which is a bank basically. So the idea behind is actually Apple is not a financial institution. They do not have a bank license, so they need a banking partner. In this case, it was Goldman Sachs. And this actually looks like it has been disrupted, but it's not the case, because the bank is still the owner of the data. Okay. Everything which comes at the end, what you see, so in this case the Apple credit card, is not because Apple disrupted the process, but it's because Apple partnered up with the bank. So it's not a real disruption. So be very mindful because Apple has no bank license. Next category, you will see the same. Investment accounts. For example, at your bank you can invest in stocks, in bonds, in different funds like ETFs, for example. This also looks very disrupted already. But when you look, for example, at a company like Robinhood, which is very popular, especially in the US, you see that, oh, I can invest with Robinhood and do everything in the app. But basically, again, Robinhood doesn't have a bank license. So it looks to be disruptive, but actually not, because in this case here, you need you have an account with Robinhood, but it's not a proper bank account. You can send money to Robinhood and invest it, but it's not a real bank. It looks like a bank, but it's not the case. Same for lending, and this is a huge example here from China. Ant Group. Ant Group is basically a spin-off of Alibaba, basically, and Ant Group was former Alipay. And actually, what is very interesting with the lending of Ant Group is the Chinese have decided, like right before the IPO of Ant Group, that Ant Group had to remodel their entire business model. Because what is happening right now is that Ant Group, which is a huge payment provider in China, they do a lot of lending especially. It's an app like Robinhood, so you can easily lend money through them, but actually they are not the end product, if you want, because behind them they are just like the intermediary here. Because Ant Group, they find the right clients with the good technology and knowledge they have, a bit like Amazon for businesses and for individuals. And what they do actually after that, they need a bank partner. So actually they will take what is called a tech fee, like 2% or something from the loan. And once they have spotted the individual, let's say they found me, I need money, so I will go through Ant Group, and it looks like they will give me the money, but actually not Ant Group is lending me the money, but the bank which is behind it. So again, it looks like a huge disruption, but it's a partnership between Ant Group and the bank behind. What is very interesting in the Ant Group example is that the Chinese government has decided, well, we don't know exactly for what reason, it could be very political and not only financial, but it's very interesting here in this case is that Ant Group has been obliged by the state, by the Chinese government, to give more security, to put more skin in the game actually. Because right now actually they're just collecting the tech fee, like 2% or something from the deal, but the banks are still behind and need all the securities that the bank has to give to the government when they are lending money. And the last example I would like to give here is when it comes to payment processing, let's say domestic and international payments, especially for companies, but also for individuals. This one looks very disrupted as well. When you look at PayPal, everybody will say, well, PayPal or a lot of other fintech companies. Well, actually, it's not really disrupted because PayPal is not a bank. They do not have a bank license. So again, you have to connect your bank account from a real bank with a real bank license. So again, here PayPal looks like a bank, but is not really a bank. The question is, do we see a real disruption, or will it be more like a partnership agreement between banks and big tech companies? I give you an example and I will tell you my pros and cons, and you will see where we're going with this. A year ago, Amazon planned to launch an Amazon bank. What do you need for that? Well, I told you right before, you need a bank license. So in the first place, it doesn't seem like a big deal because such a big company has very good lawyers, a lot of money, and a lot of people could work on this project. So this seems kind of an easy task. Actually, it's much more complicated than you think, because a bank license is regulated by the central bank / by the government. So actually it's a lot of politics and it's a lot of lobbying. And don't forget against whom you are playing. Actually, you are trying to get a piece of the cake from the bankers, and the bankers are known for having very good friends in, well, in politics and in the capitals of the world. So actually you are playing against a very good and very big opponent. Don't forget that banks have always been called as too big to fail. So you will always, don't forget that you're playing against a very, very good player. And the second thing, which is problematic actually, is once you get a bank license, well, you are obliged to be compliant with bank regulation, with bank rules. If you want to know more about it, you can Google Basel III, for example. Especially after the financial crisis of 2008, if you want to lend money to someone, or if you want to speculate, you need a certain buffer of money you put on your capital side, just to make sure that if the entire thing goes wrong, and for example that someone doesn't pay you back, that you still have the financial stability to deal with that loss. So this is a very important point, and this is actually right now because we are, and this is one of the reasons why we are not seeing a lot of big tech companies getting bank licenses. First of all, because it's very difficult to obtain a bank license, and second of all, because after that you have to play by the rules of banks, which are not so great actually. I still give you my pro list why big tech companies are very interested in this piece of the pie actually. It's of course because it's all about data, right? Right now, take a company like Amazon or Facebook. They already have a ton of data about us, but of course, once you get the financial data, and that's why like Google Pay, Facebook Pay, and all these things are very interested for them, because it gives them access to your financial data. Of course, if you get a bank license and every transaction goes through you, it's even better from a data perspective. So this is of course a huge point why such a big tech company would like to acquire a bank license. And also because think about Amazon. Amazon has so many loyal customers, including myself, and Apple, for example. You are already in the ecosystem. So imagine, and that's why Apple launched their credit card with Goldman Sachs, because it locks you even more in the Apple ecosystem. So this is very important to keep you loyal to the brand. That's also a very important point not to forget. On the con side, don't forget that regulation plays a huge role. You're talking about politics, you are talking about laws, so it's very restrictive to get such a bank license, and even if you get one, you have to be very compliant, and you need a lot of lawyers to get to all that stuff. So that's heavy duty work actually. And the thing is that the margins are super thin in banking, so that's not really interesting. Besides the fact that of course you get access to a lot of very interesting data. Central banks will ask the question if, let's say, and there is a great article by the International Monetary Fund that I'm showing you right now, that like even in 2018 or 19 they were already thinking about what is the impact if big tech companies enter into the real bank game. How will it play with financial stability? So financial stability is always a big topic. That's the goal. That's the top goal of central banks, of course, and that's why banks are basically called too big to fail, because of course they're very system relevant actually. So what I would like to tell you with all that is, in my opinion, it's not gonna be a real disruption of banks. It's more like it's gonna be more like a partnership, in my opinion, like the ones you already saw. You will see a lot of great fintech companies coming up. Maybe they will be bought by banks directly, or let's say if Amazon wants to launch something specific, I think it's more like it's gonna be more like a partnership, in my opinion, because then they leave all the heavy duty work to the banks, and then they can collect the data just by Amazon Pay, for example. So this was my final thoughts on this topic. If you like corporate finance, market finance, these kind of topics, don't forget to text me about 6 hours to do such a video with research. So don't forget to like, takes about a second. I wanted to tell you I post once a week every Sunday, so make sure to subscribe. See you soon, guys. Enjoy your week. Bye bye, guys.